Good morning, everybody. It's Wednesday, April 23rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had May corn down 2 3/4 at 473. May soybeans were up 3 at 1038, and May Chicago wheat was down 2 3/4 at 532 3/4. No export sales announcements here this morning. Outside markets are higher. Dow's up 753. S&Ps are up 131. Seems like on the back end of, I'd say, some softer tones from the White House. President Trump talking about, the potential to reduce tariffs in China, not to zero, but substantially lower from where we're at. So I think outside markets clearly appreciative of that. Also, I think he's backtracked a little bit on his call to remove Powell, which I think also just sort of easing the minds of outside markets as well. So with that, guys, Ben, maybe kick us off with a few thoughts here this morning, and then we'll throw around the room.
Yeah, I think that, options expiration is a big deal. Dustin did a great job of mentioning in the commentary yesterday that kind of subsided some fears on planning delays. But just looking at the market, this is kind of the first test on a pullback that we've had after going back up. It runs into some pretty significant moving averages from here down. We're right around the 100-day now, and the 20-day is not far below. So we'll see how we handle it. I thought it was interesting last night with after the close, some of the volatility that's in the other markets is just giving people a lot better vessel to trade. Gold, for example, a half an hour into the trading session was down $80 an ounce, and it had traded 5,000 contracts. So while I'd love to see some volatility come into the grain markets, I don't know if I want it to that degree. It's just going to stay like this for a little bit. There's so many headlines around equity markets and trade deals and people flip-flopping. I think that the majority of people involved in our industry are really kind of focused on that macro picture. It was interesting. I Googled yesterday because we get so people get so emotional about these big moves in those markets, and they quote it in terms of the point move as opposed to the percentage move. And I Googled I grokked it. How many times have the S&P moved 2% in the last 30 years? And there are a couple of years of missing data, but they made an estimate, and it's 575 times. So while these moves seem really big and eye-popping, it's also a factor of the largesse of the markets, and it's big trading opportunities for people that are out there. Grains are they just don't have a lot of appeal right now. Beans have been in a 15-cent range for going on a week, and corn's in about a 15, 16-cent range as well.
Justin, thought it was pretty interesting as we were, kind of making lows in corn yesterday during the session and seeing the outside markets as strong as they were. You made a couple of observations just on the connection there. And, certainly we've talked about it a number of times, but it feels like this market does want, some easing of those Chinese tensions. I mean, they don't want us dug in on that side of the game.
Yeah, I mean, I think you look at corn was kind of the strongest one while the equities were falling apart, and so was gold, and those were the two that were down. Could be just a complete coincidence, but you look at there's a lot of relationship trading going on, money moving around, thin markets, as Ben pointed out, options expiration. So we're moving pretty easily, and we're kind of, we went from trying to almost break out to right back to, major moving averages and relatively low volume. Beans versus corn's been a big one. I think beans versus wheat, meal versus oil. So a lot of these relationships, and you see a ton of relationships, obviously, with gold and crude versus equities or the US dollar. So there's so many interweaved trades happening at the same time. It's really hard to have a big reason for every day's move. I do think, to Ben's point, you're going into these moving averages, going into May options expiration would make sense for a normal type correction in corn, for example. Beans, on the other hand, have been kind of going the other way, and they're trying to go through those moving averages on the upside. that they've struggled. So everything's kind of back to the moving averages this morning, including the major equity indexes. So, I think just trying to find some direction. It's still more headlines, like administration. You're not really getting anything solid though.
Mm-mm.
It's more of like tone. So I think for guys like me or guys trying to find direction, you don't really have it yet. Outside, like it makes sense that, okay, equities maybe not fall apart. Maybe we're not going to try to go into an all out, who cares, and, disastrous trade war. But then again, we haven't really come up with anything yet. So yeah, I get why we're, not falling apart, which is good. It's more, confidence, but we still, as far as ag guys, we don't have a lot of confidence as far as like policy yet. It'd be nice to see some trade deals, right? Like India yesterday, Vance saying, we have some verbals, expect to have something done by fall. Well, that's like infinity for
Mhm.
6 months, So I think to get some real policies or some deals done, some to show the market that there's some positive stuff coming out of it, I think is going to be really key. Because otherwise, I think these kind of rallies will be sold, like in equities, for example, if we don't start getting some real things done.
No, that's good points, guys. Anything else? Nothing really in the way of fresh news. I mean, we'll get some ethanol data out here today. We'll take a look there, but outside of as we mentioned, just no real fresh ag-related news here this morning. Anything else on anybody else's mind here this morning?
Beans keep testing the 200-day moving average. So if we see like the overnight move higher, if we go test that high again today, which the real is up really good right now. It's possible that would be, again, a kind of a big number that's been hard to get through. So I would just watch for that. So for May beans, that would be we stay above 1039.5 for the day. I think that'd be a big settlement.
Very good.
Yeah, I would just add too on the cash market side of things, like Ben mentioned in the past, the Eastern Belt's really strong on basis. Seems moving to the west. St. Louis market, you can get over $5 corn. So if you guys are on the sideline with all this rain, you could get like, I think it's 20 something over in corn and like close to 30 in beans. So kind of like what Dustin's saying, kind of reward the rally on old crop too if it's hitting up these levels.
Yeah, very good points. Okay, well, with that, let's move over here into livestock. Rylan, we got volatility back in the cattle after after a couple of sessions. The crazy moves the last 2 days, and then feels like in hogs, if you get a little softening tone on this Chinese rhetoric, that could be good for that market as well. So, give us your thoughts here this morning.
Yeah, absolutely. I think just some of the rhetoric yesterday really kind of got some confidence back in the market. So, I mean, you saw a pretty big increase in open interest in both places. Open interest was up 5,000 contracts in cattle and 9,000 in hogs. So there was a big jump in cash hog prices yesterday, back up to 90, up $6.41. So, I think just in general, this is the kind of a good seasonal time frame for price in general as we kind of move into warmer temperatures. We start firing grills up, so there's a lot of that sentiment getting baked in right now. Same thing in the cattle market. I mean, seasonally prices typically stay pretty firm May 1 into kind of mid-June. So we'll see how much is already kind of baked in. We're right back making new highs for the move. We're within contract highs on the cattle side of things. So we're just waiting to see if the packers are willing to pay up. Beef prices were lower yesterday, so maybe that's going to sour a little bit going into today, but overall I'd still say there's quite a bit of confidence that supplies are tight enough and that cattle slaughter is going to be reduced enough to ultimately support that over time. So still just kind of a waiting game right now and see how it shapes up.
Very good. Appreciate the update there. One thing to note, we will have weekly export sales out tomorrow morning, 7:30 Central. So we'll take a look at those tomorrow morning and then certainly visit about that in the war room. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. And again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. We hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.